à ce webinaire sur qu'est-ce que les états financiers. Welcome to this webinar on financial statement. Donc, mon nom est Andréane Martel. Je suis la directrice du programme Activer le changement. Hi everyone, my name is Andréane Martel. I'm the director of the Spur Change program. Est-ce que vous pouvez passer à la prochaine diapo? Donc voilà, l'équipe d'Activer le changement, nous sommes basés donc à différents endroits.
The Spur team is based in different places throughout Canada. We have members who are in Quebec, Sherbrooke, Toronto, Edmonton, and we work in close collaboration with the different provincial council and regional councils. I'm in Montreal on the unceded Indigenous territory of the Kanien'kehá:ka Nation. Traditionally, Montreal has been a place of gathering for many First Nations, so I wish to recognize this. And if you wish to do so, I encourage you to name the territory on which you work in the chat box. Many people are part of an activity organized by Spur Change for the first time, so I just want to mention quickly that Spur Change is a 5-year initiative funded by Global Affairs Canada, aiming to increase the effectiveness of Canadian small and medium organizations, SMOs, with learning and knowledge sharing opportunities. We organize many learning opportunities, conferences. We have a program for youth engagement and global citizenship education. Nico, could you please change slides?
First, this workshop will be recorded and available publicly afterward. So only the presentation portion will be shared publicly, not the question and answer period. So you can feel safe to ask your questions. This is a safe space that we are providing to you. Please ensure that you're muted at all time, except when we are inviting you to ask questions, for example. You can use the raise hand options if you wish to speak. You can use the chat function at any moment if you want to share concerns or questions. And as I said before, we will send the slides in English and French after the webinar. We also always invite you in our learning opportunities to turn on your video to make it a little bit more human-centered. Okay, so the theme of today's conference is around financial statements. So we are very pleased to see the number of people who were interested in the session today, even if we started advertising it only a week ago. The session today aims to support small and medium organizations preparing financial statements, and especially those applying to FIT and Take 3. So the FIT and the Spur program, we try to complement each other. We are a sister program for SMOs, and Christina, who is the FIT director, and I meet regularly. And this topic came from one of our conversations about the next intake, when we were wondering how we could support small and medium organizations who are applying to FIT. So based on previous intakes, we decided to offer this opportunity to you today. So you will have access to an expert who will address some common mistakes made by organizations submitting financial statements. So I must say that you won't become an expert in financial statement after only a 60-minute session, but hopefully we can demystify what is required in a financial statement and share some tips on how to prepare yours. Okay, so our guest speaker will talk for about 20 minutes, and then she will respond to your questions, which could be shared by raising your hand or by writing in the chat. Okay, so now I'm pleased to introduce Lynn Stinstra. She is a chartered professional accountant who works at the Winnipeg Symphony Orchestra as VP of Finance and Administration. Prior to this, she held the same position at Canadian Lutheran World Relief. She is currently the chair for Creative Manitoba and has been on that board for 3 years. Lynn has experience in both nonprofit and for-profit organizations in areas of finance, administration, human resource, IT, governance, risk management, fundraising. And she also served on the Manitoba Council for International Corporation, so MCIC board, as president for 4 years, and on the Finance Committee as well. So Lynn, thank you for joining us today, and the floor is yours.
Thanks so much. It's a pleasure to be here. I just wanted to add to the introduction because it's to give you a sense of who I am as a person and why I wanted to do a presentation like this. When I worked at CLWR and in my time on the board at MCIC I had the opportunity to do some financial reviews around the world. So I've done financial reviews in Ethiopia, in Mozambique, in Zambia, in Peru. And for me, one of my passions is about, how do we empower women through financial literacy? So this sort of ties into that passion. When I think about, the women that I met in the various countries around the world, and just understanding and hearing what they said about either having the cash through microloans in India or being able to put together a soap collective in a refugee camp to generate money that would then, enable them to have money to empower money through finances. So whether it's through financial literacy or through the actual tools themselves, that's something that's important to me, and it's something that I've got passion for. So, right now I'm doing a little bit of work for MCIC, and it's something that I really I think it's a great opportunity. So anyways, I'm happy to answer questions about financial statements, and we've got a bit of an agenda here. If we could go to the next slide, please. We're going to look at the purpose of financial statements. We're going to look at the main components of financial statements. We'll walk through a couple of, if you could go back. Yeah, a couple of examples. And then in terms of the submissions for the FIT proposal, we'll look at some of the common errors that we see when we're asking for financial statements. So next slide. Sorry about that. Got to move mine along too. There we go. All right. So in terms of why do we have financial statements? Well, financial statements are a key tool to understand the organization. They're necessary in order to be able to make informed decisions about what the organization can afford to do, and to understand overall how the organization is doing. It's also a communication tool, whether it's used by internally, the directors of the organization or staff or the board. Understanding the finances through the financial statements. Anyways, it just provides a tool to be able to do that. Financial statements are measurable, they're objective, they're comparative, so you can look at it in either year to year, or you can actually compare, I can look at MCI's financial statements and compare them to OCI's financial statements to see, how are we doing in comparison. We can do a little bit of benchmarking and key practices there. And do let me know if you can't hear me, because I know I am a soft talker. So Nico, feel free to interject at any point in time and boost my volume. Financial statements, they provide an indication of the organizational health, whether it's financial or, well, I mean, it's mainly financial, but you can read other things through the numbers as well. You can also look at the risk based on a couple of years of financial statements and the financial integrity of an organization. Next slide, please. So non-for-profit organizations have many stakeholders, and each one has an interest in the financial affairs of the organization. All stakeholders have a common interest in such areas as the protection of assets that have been entrusted to the organization, and the effective and efficient use of resources to further its mission. Some stakeholders have even more specific interests. So funders want to know that they want assurances that their contributions to the organizations are being used in accordance with funding submissions and with subsequent approval. Donors, particularly major donors, want assurances that their contributions are being applied according to their wishes. Members, like MCIC members, want to know that the funds that they've contributed, their fees that they've contributed, are being used in the way that you expect them to be used, but also in how is the organization performing. Am I getting value for the money for these fees? And then, of course, CRA, the Canada Revenue Agency, requires all nonprofits and pretty much all organizations to submit an annual filing that does include financial information and does ask for financial statements. Next slide, please. So what is in financial statements? The main components of financial statements, if you're looking at audited financial statements, there would be a letter from the auditor stating an opinion of the financial statements. If they aren't audited, you may have a review letter, or there may not be a letter. They may just be unaudited financial statements. And then you typically see 4 statements. So the statement of financial position, also known as the balance sheet. There's the statement of operations, formerly known as the income statement. There's a statement of changes in net assets, a statement of cash flows, and then importantly, there's also the notes to the financial statements. And those are the notes that they provide information about, explanations around accounting policies, amortization of assets, inventory valuations, deferred revenue, and then schedules of more detailed information. So these are the components that you would expect to see in audited financial statements and in general financial statements as well. And so when grantors are looking for financial statements, these are the components that would need to be submitted. There is a difference between an audited financial statement and an unaudited financial statement. A lot of that for for SMOs, sorry, still not good with the lingo all the time, is that you may choose not to have an audited financial statement if you can't afford it. So a lot of organizations under $100,000 won't spend the money to pay for auditors to come in to review their financial statements. They may ask somebody like a CPA to express to do a financial review, which is not to give an opinion, but to review what's in there to see if it material represents what the transactions throughout the year were for that organization. So I do have some examples. If we have time, we could review one of them, but that's just a very brief overview of what you'd expect to see in financial statements. So next slide, please. So the statement of financial position, the balance sheet, is a snapshot. It's a statement of one moment in time. So we call it a snapshot in time. We're looking at generally the end of the month or the end of the year. So it's at December 31st. So on that very one day, what do we own? What do we owe? And what's the difference between what we own and what we owe, essentially, is the formula. In accounting, we like things, well, we like formulas. So our financial statements are, we do have formulas behind each one. So in accounting, things need to balance. You need to have a debit and a credit. You need to have assets on one side of your balance sheet and then liabilities and net assets on the other side, and those two things will equal. I probably should mention what an asset is in case you're curious. So assets are things that are owned by the nonprofit or owed to the nonprofit. So some examples of these things are cash, investments, buildings, furniture, equipment, vehicles. Other things that are owed to the organization would be accounts receivable. So if you've done work for somebody, program fees that have been committed but not yet received, prepaid expenses, for things that you've already paid for that you will receive in the future. Liabilities are amounts that SMOs owe to others. So those would be your accounts payable if you bought some supplies, if you have wages that you owe to your staff, if you have unremitted government remittances, if you've got deferred revenue, you've received money from Global Affairs Canada that you haven't spent yet, this is where you'd receive, or where you'd indicate that information on your balance sheet. And then any loans or mortgages that you may have are also liabilities. Net assets are the difference between what the organization owns and what it owes. So essentially, it's the money that's available for the organization to use in the future to continue to operate and to achieve its goal and its mission. Can we go to the next slide? So here's an example of an SMO that I found on the internet that's actually a member of MCIC. So these are, available on the internet. We do have a copy of them if you want to look at them too. But this is just the balance sheet, the statement of financial position at March 31st. And you can see the assets are listed first. We've got the cash, the accounts receivable, we've got current, we've got prepaid expenses, GST recoverable, investments, and then a total asset. So in 2017, this organization had $30,000 in assets. In 2016, they had $41,000 in assets. So from year to year, and this is why it's comparative, it's helpful to have comparative financial statements. You can see what's changed. So from 2016 to 2017, they have less assets. And that has to do with, well, as we go down the financial statements, you'll see the liabilities. So in the liability section, the accounts payable, we've got wages payable, unexpended grants, which is often referred to as deferred grants as well. So they've got total liabilities of $13,000 versus $24,000 in 2016, and the main difference there is essentially the timing of accounts payable and the timing of deferred revenue for grants. So that's the biggest difference there. And then the net assets is the difference between, as we mentioned before, your assets and your liabilities is your net assets. So the thing that I point out here is that from 2017 to 2016, there's a $90 difference, and that would be the income that's flowing from the income statement or the statement of operations. And that's how the two financial statements connect. Can we go back to the last slide, Nico?
S'il vous plaît, Nico.
Thank you. So at the bottom there,
Donc, en bas ici de la diapo.
Oh, sorry, I can just hear the French translation. So we've got the formula for the income statement. The income statement is a statement that looks at all of the activities that happened in that period of time. So whether that period of time is a month or the fiscal year, it indicates at the top what that period of time is. So in this example, the year ends at December 31st. So it's for the entire calendar year, which in this case would be their fiscal year. And the formula here is the statement of operations, or the income statement takes revenue, it minus expenses, and then you get your net income. So if we could proceed on with the next slide, and then the one after that. So the statement of operations, as I said before, it's taking your revenue minus your expenses. And this is really the most important statement. It tells you what happened during the year. So what revenue did we bring in, whether it was your fees or your grants or donations that you've received. Is there any investment income? You total up your revenue and then you deduct your expenses. So your expenses would be costs for rent, costs for buildings, for supplies, for salaries, those sorts of things. Generally, you'd group them according to categories. So if you've got fundraising expenses, you put them in one section. If you have admin expenses, you put them in another. The things that are required for financial statements is actually that list there. You need to list your amortization expense or your deferred expense, as well as your R&D expense and your interest expense. And generally, once again, statements of operations, it's helpful for them to be comparative. So you can see the prior period or the previous year. So you can see the change from period to period and the impact. Let's go to the next slide, please. So we've got another example here financial statements. And this one actually has both the statement of operations at the top and then the statement of financial position at the bottom. This is for a slightly larger organization. And you can see that the revenue, they've listed project grants in 2019, 2019 of $554,000 compared to 2017 of 459. So you can see from year to year that there's been an increase of, just under, well, let's say $90,000 approximately. Their other revenues are donations and other income. And then in this case, which I didn't mention earlier, you need to show any gains on sales of assets. So to me, it looks like they probably sold a building for $682,000 or some large, I don't know. I'm going to assume it's a building here. So they've got total revenues of 2.2 million compared to last year of 1.6 million. So they're recognizing the gain on that sale. So that's probably cash at this point in time. Expenses are listed below. You can see that they've grouped them according to development projects, so that you can easily see the grant revenue versus the development projects, $1.2 million. And then they've got fundraising, communication and development, education expenses of $375,000, which have actually decreased from the previous year. And then they've got administration expenses of $218 in 2019. So total expenses of $1.8 million. And in this year, they've got an excess of revenue over expenses of $625,000. I know this is like super exciting stuff, but please hold on, folks. It's probably more exciting for me than it is for you. So anyways, what I'll just point out here is that in nonprofits, we often focus on having a surplus or an excess of revenue over expenses. You can see in the previous year that they actually had a deficit or a deficiency of revenue, of expenses over revenue. They had a loss, as some people call it, of $117,000. Sometimes organizations are intentional. Well, often they're intentional about controlling the bottom line, right? So you want to make sure that you're being sustainable and efficient and effective with your resources, and using this tool. Anyways, we can measure how are we doing. So some organizations say that they want to actually use some of the resources that they have on their balance sheet and will intentionally have a deficit in 1 year to be able to use up some of the money that's sitting in the balance sheet at the bottom there. So I'm sure I'm not explaining this particularly well, but there is a linkage between the two financial statements. So that $621,000 in 2019 goes down to the balance sheet, to the statement of financial position below. Can we? Well, it's kind of hard to see on this one, but anyways, you can see that the current assets are significantly higher than last year. So they're more than $1 million more in cash. I'm assuming it's from the sale of the building or whatever asset that they sold for $682,000. So they're holding a lot of cash at the end of March of 2019. And you can see that their capital assets have decreased to $48,000 from $503. So there's a gain on the value of, let's say it was the building. They've recognized that gain in the income statement. It comes out of assets. They're recognizing the cash that they got for that asset. And then down below, you'll see that the net assets has increased also by that $621,000 from the excess of revenue over expenditures. So that's that 621, and I'm pointing to my screen, which probably doesn't help you, but that 621 directly goes into that net asset line at the bottom there. And so you'll see that number go up or go down directly proportional to what's on the statement of operations for that year. So that's how the two statements link together, and those are the two that are the key financial statements that really tell the most important part of the story. And the other financial statements, you know, the statement of cash flow and the statement of net assets, you know, are probably something that you don't need to spend as much time on, but you know, for somebody like me, they're interesting to look at because they tell a deeper story of the health of the organization and the cash flow and, you know, sort of, you know, the financial position. So let's move on to the next slide. Yeah, so thinking about the framework of MCIC and FIT, some of the issues that we've seen in terms of people applying for our program is that our requirements are that you need to submit financial statements. They need to be signed, and that they need to be for the previous period. So some of the things that automatically disqualify people are that we're not receiving audited statements that are signed. So they don't need to be audited, but they do need to be signed by either the board treasurer or the senior financial officer, the SFO in the organization. We prefer audited statements, but are willing to take non-audited statements as long as the board has signed off on them, that they fairly represent the transactions in that organization for the past year. Some of the other problems that we've seen is that people don't know what to include. They don't know what financial statements are. So they're either providing their bank statements or their tax forms, and they're not providing, you know, financial statements. Or they're providing financial statements that have been so summarized that there's no valuable information in them. Yeah, so what else? We've also seen that only a balance sheet or a statement of financial position has been provided without the statement of operations, and we need both of them. Ideally, we would have the notes to the financial statement and all the other schedules as well, but really a balance sheet and an income statement are absolutely necessary. Bank statements don't work. Project budgets have also been provided. We need the financial statements for the entire organization so that we can judge, is this organization healthy enough? Do they have the resilience and the expertise based on their numbers to be able to implement this project? So a project budget will not work. It's part of the application, but we do need the financial statements for the entire organization. In some cases, I know with FIT we only request 1 year, but other organizations require at least 2 years of financial statements. So providing comparative financial statements will easily resolve that problem. So that would be my recommendation. Generally with audited financial statements, you're always going to have the current year and then the previous year, so that you're getting your 2 years of financial statements in one. And then the other problem that we've seen is that we're not receiving the most current financial year. So thinking back to that first example that we have, it was from 2017. That 2017 would not work. We would need 2019, 2020, depending on when your fiscal year ended. So yeah. Anyways, that's sort of the whirlwind view of financial statements and some of the issues that we've seen and some of the questions around financial statements in the FIT program. And I guess now I'm willing to answer any questions that you might have.
Great, thank you. Thank you so much, Lynn, for sharing your knowledge, but also I especially appreciate looking at different examples and templates. I think it's very useful to better understand how to read the different components with the financial statements, but so thanks for doing a little search and for sharing them with us. Now we will turn to questions. So I invite you to either write your question in the chat or raise your hand so we could invite you to unmute and ask your question directly. Donc, on vous invite à poser vos questions.
So we will now invite you to ask your questions. You can do so in French or English. You can write your question in the chat box or raise your hand and we'll give the mic over to you. I see that we already have one question in the chat.
By Giulio Brunelli. So the question is the name of an organization, so the brand, considered an asset?
That is a mighty fine question. You know, there's a whole intangible asset section in audited financial statements, which I haven't touched on at all. Typically, you can't quantify what your brand is worth, so you can't actually put a value in your financial statements. However, and this may be old information because I've been a CPA for 20 some odd years. 20 years ago, if you sold your business and then the value of the business was worth more than the value of the assets, that's essentially shareholder equity or net assets. That's where you'd see the value of your brand, but no, typically you can't quantify something that's intangible. So.
Okay, thank you. We have another question here from Bruce Petch. So is there also a type of statement called note to reader?
I appreciate that question. There isn't. It really is the notes at the end of the financial statement, and they're helpful to read because they often explain what accounting policies, how long you're writing your assets off over. If you own some computers, are you amortizing them over 4 years, over 3 years, over 5 years? For example, in the balance sheet that we looked at, there were no assets in that section. And if you dig down into the notes, you'll see that they do have assets, but they've been around so long that their assets aren't they've been written off over time. So the $20,000 of assets they have are worth 0 at this point in time. So yeah, anyways, I think that answered that question.
Okay, so the next question from Christina. So if you don't have an accountant in your organization, would you have any tips on how to create a financial statement? Is there a good software, for example?
That's a good question. You know what? A lot of organizations use something like QuickBooks. It's fairly easy to use. They have an online version that will automatically create financial statements for you. They're sort of general financial statements, and you can easily tweak them. And it's really the online version. They've actually made it easy to use so that non-accounting people can use it. They don't use debits and credits. So somebody like me would be frustrated because I want to see the other half of the accounting entry. But somebody who's not an accounting person would find it really easy to use. And I would highly recommend something like QuickBooks, or, there are a couple of other ones that perhaps are a little bit cheaper, but QuickBooks can be fairly inexpensive and easy to use. Some of the other resources that I would recommend that you look at are CPA Canada has a nonprofit section on their website that they've got a guide to questions to ask when reviewing financial statements. What sort of, if you're a board member, what questions should you be asking around finances? What are financial controls? Why do I need to do these sorts of things? In Manitoba, there's another organization, and I'm sure they're across Canada, something called Volunteer Manitoba. They do webinars, and they've got resources on their website as well about financial resources for small nonprofits as well. Mm-hmm.
Great, thanks for sharing these resources. Another question from Leah. Could you state again which specific statement FIT needs? Statement of operations, statement of financial position, balance sheet, income statement?
Well, those are all yeah. So income statement and balance sheet And then we need them signed, would be the minimum requirement. Ideally, there'd be notes to the financial statement as well. So they're also known as the statement of operations and the statement of financial position. So we don't require the statement of net assets or the cash flow statement, but the balance sheet and the income statement are absolutely required, and they need to be signed by the directors.
Great. So next questions from Aditya Rayala. So thanks for the great presentation. So is net income from the income statement always reflected in the net assets and the balance sheet? Is that always how the two statements are connected?
That is exactly the key point, which I probably didn't iterate very clearly, but that is the one thing that you need to, that connects the two is the revenue or the loss goes into net assets. Yeah, so that's how the two are connected.
Parfait, merci. Donc, la prochaine question en français. Juste laisser le temps à l'interprète de
Next question is in English.
Donc, une question de Julie Rogers.
It's a question from Julie Rogers. Are there good practices for accounting for volunteer contribution in specific circumstances? So are there best practices to account for volunteer contribution in specific circumstances?
I'm not quite sure what the question is asking. Is it for the value of the volunteer labor, or is it that you have volunteers who are tracking the finances in the system?
Julie, est-ce que je peux vous inviter à enlever votre sourdine?
Julie, can I invite you to unmute yourself and to ask your question in French out loud, please? Yes, thank you. We have volunteers working, giving their time in specific areas for training in Africa. So we account for a certain amount of hours worked. So on one hand, we account for them in revenues, and on the other side in expenses. Are we doing this correctly? I wonder, do you often see that in financial statements?
Yes and no. It's very good to value your in-kind contributions, and that volunteer labor would qualify as in-kind contribution. And absolutely, you show it in the revenue section, and then you show it in the expense section as well. In terms of, are you going to see that in audited financial statements? Probably not. You'll see it in unaudited financial statements. Often in audited statements, you would see it in a note in the financial statement that would say, because it's impossible to quantify and to qualify, we recognize that, we have 1,000 volunteers and they have contributed, 5,000 hours, and this is the value. So typically you wouldn't see it in the audited statements, but in internal unaudited statements and in grant applications, you want to quantify that value, because it really does help offset, and it provides value to the project, right? So it's definitely part of it. It's just not part of an audited financial statement.
Great, thanks. And the next question is from David from Merrill Village. If you need to provide a high-level view of your organization's year-end position to people unfamiliar with deciphering a financial statement, is there a standard summary table to use? If not, which 3 to 5 data points would you suggest we include in order to present the position?
Yeah, I would actually recommend the ones that I had in my slideshow, because those are good, simple, key ways to clearly indicate what you have. So yeah, 3 to 5, whether you're year-end position. yeah, so on the revenue end, you know, what type of revenue is it a donation? Is it a grant? What type of grant is it? Is it for fees? And then under expenses, you would quantify that based on the type of expense. Is it a project expense? Is it a fundraising expense? Is it a administration expense? And then, yeah, and they're typically organized by biggest to lowest, which, whatever. So I would look at the examples I had in my presentation. Something like that would suffice.
Okay, thanks. The next question is from David from Waldacor. I know you sometimes write down asset value. Wondering if you ever increase them based on market values without having to sell your asset, like the property in the example given.
Very good question. A little bit more complex than, yes, absolutely, gains in your assets, regardless of whether you sell them or not. And that would be for marketable securities. You would recognize either on a monthly basis or not. So if you own securities or essentially it's securities, you wouldn't recognize the value of the increase in your building unless you were actually selling the building. So it's only marketable securities, something that you actually have, you know, that you're receiving audited financial statements to verify that increase in value or that decrease in value, that you would do definitely at year end, but depending on the value and the impact of them on a monthly basis. So yeah.
Okay, so the next question is from Giulio Brunelli. How and where is the variance between budget and statement to be found in the financial statements?
Good question. So for internal financial statements, what you would see, and I didn't mention this at all, is that you would have your budget for each of your section areas, and you would compare your actuals to your budget so that you could see how your plan for the year is going. In audited financial statements, you're not including your budget because the budget is essentially irrelevant at that point in time. And you're paying your auditors to review your actual numbers, not what your plan was for the year. So yeah, those variance reports on the financial statements on a monthly basis are important for internal users and for your board, but not for your fund. Well, I suppose for your funders as well, but you know, that's a whole different story depending on who your funder is. And yeah. Hopefully that answers the question.
Thank you. So just a follow-up question from David from My Oral Village. He's asking, I don't know, Lynn, if you see the questions, but to clarify, literally just 3-5 data points drawn from the 3 different tables you mentioned, maybe just the bottom lines of each.
It depends on the purpose of the financial statement, right? Like if you're just doing a summary financial statement, can you, Nico, could you bring up the MCIC, the very last slide there, or the second last slide? I think maybe it's the next one. Is that possible?
Is it the PDF document? Is that what you're referring to?
No, I think it's the last slide, maybe?
Last slide that I have, it's this one here.
Oh, okay. Okay, well.
Well, this is, Nico, this is the MCIC budget, right? The MCIC financial statement, I mean. So you, yeah. I think it's the first table in the slides.
Okay. Mm-hmm.
Or you could just bring up the one with the water tower on it. That's fine too.
All right. Sorry about that.
No worries. Yeah, 3 to 4 is fine. Maybe I'm not understanding what your question is, to clarify, literally just 3 to 5 data points drawn from the 3 different tables you mentioned.
David, can I invite you? There you go.
I can explain. Yes,
Thank
you, Lynn. Yeah, I mean, like literally maybe just a summary table is what I'm talking about, but this is too complicated. I mean, you know, if I wanted to just, I guess maybe, you know, have total revenues without the breakdown, total expenses. I mean, the bottom lines is there any kind of like true summary form? So you mentioned a summary table, but something that summarizes the different types of statements. So the, you know, the balance sheet, the income, and these two, the financial position. I mean, just one. Have you ever seen a table like that that's really high level?
Yeah, I mean, I'm not sure what the use of that would be. Like the one that we have in front of us is sort of the minimal amount of information that I would look for in a financial statement. As I said before, one of the problems that we've seen in the past is having too much of a summary statement. So just total revenues versus total expenses, total assets, and your net assets. Like just having those data points isn't enough for us to make an informed decision. We need to know what's in that revenue. You know, is it money coming from endowment funds? Is it money from funders? Like where is that money coming from and how is it being spent? So it's more helpful. Or are you asking about in terms of understanding?
My question was for people who, as I said, who cannot decipher a financial statement. So this is not for people like yourself or myself,
right.
For someone who really would just look at this and not even engage with it. So I just looking for anybody who has experiences presenting their financial position to people that are not going to learn how to, not going to spend an hour on this thing. So that's the question I have.
Right. Well, you know, a lot of organizations in their annual report will have like a chart of, you know, they'll have a pie chart and they'll indicate what their net income was for the year, what their assets are, and they'll have, sorry, I had it in my other presentation, but so yeah, there are a couple data points that, you know, I could easily point you to that, that are very simple that most people include in their annual report that's available online that are a little easier to understand. Yeah.
Okay. Thank you very much.
Thank you for the question, David, and thanks, Lynn. So there's no more questions in the chat. Does anyone want to ask maybe a last question? So you can either raise your hand, unmute, or write it directly in the chat. Okay, well, otherwise, I invite you to join me in thanking Lynn for the presentation today. I think that was very helpful.